Good evening, everyone. This is Brian Shannon from alphatrends.net. Today is Friday. It's the 6th of September 2013, and the markets are closed for the week here. We did have a pretty good little bounce this week, up 1.5% for the S&P 500, close to 2% for the NASDAQ and Russell 2000. And the semiconductors led the way with a 3.5% rally, and oil was up 2.5%, 2.3%. Let's take a look at the action for the week. We'll look at the last 4 days. This is the holiday shortened week, of course. We only had 4 days of trading. This is the volume weighted average price. So Tuesday we continued lower from last week. That was the we had been in this downtrend and below the declining 5-day moving average, and we had a little continuation down, then that gap higher, and we continued nicely back up this afternoon. The latter part of the week, we are just below that 50-day moving average, and we have the potential for resistance up above between really 168 down to about 167.5. Looking at this chart right now, if you wanted to look at as we had observed the head and shoulders pattern back in here, we could see that we have the potential of forming an inverted head and shoulders pattern on the daily time frame. And in order to get that, this would become our neckline, and this could be the beginning of a right shoulder. That would be a bullish scenario, and I think in order for that to occur next week, we'd want to see the market hold above about 165 or so. We do have a rising 5-day moving average at this point, so we can go back to cautiously optimistic. And of course, the longer term trend is still clearly in an uptrend. If we take a look at these trend lines off of the last couple of years, again, we're still above that rising 40-week or 200-day moving average, and this daily time frame is showing us a pullback. But is it going to be similar to the last pullback that got resolved back to the upside, or is it going to turn into something a little bit more serious on the downside? And the answer is nobody knows. So what we have to do is be aware of the important levels. We want to look at, for instance, of course, the volume weighted average price. I'm just changing the number of days here. Since that low in June, that's been an important level, and we're back above that now. We are also, of course, above that rising 5-day moving average, and this area that now could potentially act as our support down near that 5-day moving average at about $65 a share. So that's what we'll be looking for next week. Cautiously optimistic, but again, the daily time frame is just kind of looking a little bit messy. We do have a rising 50-day moving average, and that 50-day moving average, if you look at it, this is about 50 days ago right here. So that 50-day moving average will continue to rise here, at least over the next week to week and a half. And it's hard to read into this. There's been some amazing opportunities on the long side this week. We'll talk about some of those shortly that Alpha Trends subscribers got involved in. But let's take a look at the NASDAQ. The NASDAQ closed pretty close to a new high here, and you can see that we were in new high territory briefly. So what we were looking at coming into this week was that we had this little band of support down at 75 to 75 and a quarter, and we thought if we broke below that 75 level, it would be highly likely to come down to the 74 and test the 50-day moving average. Well, instead, we look at it and say we bounced, and that was another scenario. Now we're back up to this high end of the range, which is basically 77 to 77 and a quarter. So we've been really range bound here over the last month or so, and with a rising 50-day moving average, as I like to say, it's generally innocent till proven guilty. Generally, we're going to see that the consolidations get resolved to the upside, but we don't want to be buying after a rally. We don't want to be taking undue risk and looking for. So instead, what we want to do is say, what are the potential levels of important support next week? Let's see how the market handles the midpoint of this range once again at about 76 and a quarter. If we can hold above that, maybe we pull back, hold above it, and then create some energy to break out. Well, then we're up to all-time high, or not all-time highs, but multi-year highs here, and this market will continue seemingly to stair-step higher above these longer-term trend lines that we see, of course, on the weekly time frame, and also on the daily time frame. We can go back to the lows from late last year, and those are well below us. But 75 75 will be the important level once again here over the next couple weeks, and it's looking like the S&P, I'm sorry, the Nasdaq wants to resolve itself to the upside still. The Russell 2000 is a little bit different here. We've still got this little trend line lower, and we're in this trend channel with lower highs and lower lows. We did make a lower low once again this week, so we have to be some cautious in there. Of course, the longer term trend still clearly higher here on the weekly time frame, with prior resistance levels becoming support. So about that 100 level really takes on a lot of significance with that weekly time frame being so important. We can see that blown up here a little bit on the daily time frame. But again, we do have a trend line which is held this market captive here recently. So I think that the best bullish scenario would be a pullback down towards about 101.5, create a higher low, and then break some resistance, which right now the important level of resistance, as we know, has been about 103 to 103.5. If we can get back above, so pull back, make a higher high, and then create some support near there, then I could see a case where we could see new highs within the next few weeks in the Russell 2000. There's a lot of global uncertainty. There's a lot of headline risk and that sort of thing. I have found that the better opportunities are not in the ETFs, but in the individual stocks, and that's what we talk about for subscribers at Alpha Trends each day. The semiconductors had broken that 38 level and gotten us pretty cautious here a couple weeks ago. Well, they got back above that level, and if you think back to last week, I said the only thing that would change my mind about the bearishness of the semiconductors if we break above and hold above $38. So we've done that, and that doesn't mean that I think we're back into a giant uptrend on these semiconductors. In fact, you could even make the case that this is making a head and shoulders pattern here on the bigger time frame. Let's stay focused though on the key levels. I'm not trying to make predictions. I'm trying to say that if next week we can hold above 37.75 to 38, then we generally want to give the benefit of the doubt to the buyers, but we want to be careful, that is in the semiconductors, but we want to be careful about where we purchase. We obviously don't want to purchase after a move has occurred. We want to see a pullback to support, and then as it starts rising once again, we want to buy there with a stop below the higher low, wherever that may be. And the market is dynamic. Our plan has to be dynamic. If you come into the week thinking, hey, I'm bearish, this market's going to hell in a handbasket, and you got massively short expecting something like this, well, you got hit real hard. It's not about making predictions. It's about knowing potential probabilities, likelihoods, and key levels where those scenarios are likely to play out, and then to manage risk. So find the opportunities that look low risk. If they're not there, then find another vehicle to trade or sit on the sidelines in cash, or shrink your time frame down to a shorter term time frame, maybe a 1 minute chart if you want a day trade. But you have to know what is your time frame. No one has the same exact way of looking at the market or the same goals, same amount of time, that sort of thing. The financials are still in this downward channel and below a 50-day moving average. We've got the 5-day moving average, which is holding above, so that's encouraging. However, we've still got this trend line that is battling in here, and so perhaps maybe next week, if we get back above this, really what's been the important level is $19.80 up to 20 and a dime. So in order for this market to think that we're going to have a little bit of chance of recovery, it'd have to be back above about 20 and a dime. That's about where we see that 50-day moving average as well. So it's possible we'll do that. Nobody has a crystal ball. That's not what I'm trying to do here. If anyone thinks that I'm trying to predict what's going to happen next week, you don't understand what I'm doing. You don't understand the value of technical analysis. We're looking for potential scenarios, for setups. Setups like BMRN that we were looking at for subscribers this week on Tuesday, and getting involved after that initial pullback. It gets back above volume weighted average price here at about 66.5, and then from there, from 66.5, it was just a runaway upward momentum up to the highs, the close here of 72.5. ASTX we got involved in the morning that it went 30-something% right in here as it broke some resistance. This is the exact level that we were getting involved in, and as I had been very vocal on Alpha Trends, I told subscribers subscribers that they ought to be getting rid of it above $9 a share. These are the types of ideas. They don't all work. Boyd Gaming, I had high hopes for Boyd Gaming this week. Got a great looking weekly chart and wanted to get involved right here. I could argue that maybe I should have gotten involved above that level, but instead we got involved right here as it made the higher high, and we got stopped out right there. I'm sorry, just below $12 a share for about a 35-cent loss. And taking losses sucks, but it's part of trading. What we do is say, if the market makes a higher high, I'm looking to get involved with a protective stop down below. And if it makes a lower low, then I want to get out because the definition of trend is no longer valid. But if you look at the solar stocks that we're looking at on Tuesday morning, stocks like SOL, we got involved in right here and got stopped out yesterday. TSL got involved in right in this area and got stopped out of today. And then there was YGE, which we got involved in right in here, and still have an open position in that one. So there's a lot of opportunity. Here, let me show you another loser. Microsoft. I was looking. It actually wasn't even a loser because it was something we were looking at as a potential trade. I said that if it can get above, do so. This is what I was looking for Microsoft to do, which was this. And instead, we got greeted with a gap down Tuesday morning, and we lost zero money by being there waiting for price action to say, hey, it's going to go higher, the 5-day moving average flattening out and finding support. That's the scenario we were looking for. Instead, we were involved in the stock Kong, K-O-N-G, just as it was breaking out right here on Wednesday. So there's a lot of opportunity in the market. They're not all going to be winners. And one of the biggest mistakes I saw this week people were doing was trying to get involved in some of these solar stocks that hadn't moved yet. Junk stocks like RSOL, stocks like FSLR. These are in downtrends. Solar City, it's in a downtrend. Go with the winning stocks. Go with the ones that are at 52 weeks highs with rising 10, 20, and 50-day moving averages. The same thing with these Chinese names. There were a lot of good Chinese movers, but the ones that didn't work and people were wasting their time trying to chase bounces were in REN, were in KNDI, were in DANG. And you can make money, don't get me wrong, on little bounces in here, but they're typically going to fail. You're going to have to be a lot faster than the other people who are getting involved in these stocks and thinking, well, what are the Chinese names I can get involved in? Instead, go with the ones that are holding up, the winning stocks. Let's take a look real quick at Apple, and then we'll wrap this up. By the way, if you haven't taken a 7-day free trial to Alpha Trends, I'm in selling mode here today, as you can hear, so go ahead and do that. And I'd also appreciate if you give me a thumbs up on the YouTube or share it on Facebook or LinkedIn or whatever. I don't ask a lot for these videos, so if you can take 2 seconds and do that, I'd appreciate it. Apple is on the weekly time frame, had broken the important resistance, as we know, at about 465. And when we drill down a little bit further, I was thinking and hoping that we would get a pullback down towards that level. We hadn't seen it this week, but we didn't really make any upward progress either. We saw that this prior support at 495 to 502-ish acted as resistance. What I do like about Apple is that it had pulled back. We had the lower highs and lower lows. Now we have this higher high and a higher low, and we've just seen that the 5-day moving average is heading higher. So I think above this week's high from just Wednesday actually of this week at about 502, I think that Apple has the potential to continue to move higher, and I would say a worst case stop would probably go below today's low. You could probably even get away with a stop near about 494. I don't like to look at upside objectives, but perhaps we could be heading back up towards 520 or so. Anyways, thanks for tuning in. Have a good weekend, and that'll do it.